Hey everybody, thank you for coming back. I see many of you again. Sorry, it's just one of those days where there's too much going on. It's been a crazy week. And we're going to recap exactly what has happened this week. It's been a crazy week. So we got audio, which is always great. And a shout out to St. Jude Needs Us. Mr. Mike, I see you out there. Get well soon, buddy. Alrighty. And thank you to the mods in the chat as well. T&D Tesla, I see you too. So this week, let me see. Global crypto market cap 1.04 trillion. It's like it's been that way for a long time. It's just steady Eddie. Volume is very low, $15.3 billion. Bitcoin's at 26K, 25.9, 25.8, 26K. Does nothing. Market cap dominance of Bitcoin is 48.3, which means the alts are doing a little bit better. Ethereum, we will be talking a bit about Ethereum today, how they fit a perfect equilibrium. It's about 1635. And we'll talk about that 1635. It's a very special number as well. And ETH dominance is around 19%, where it has been as well for quite a while. And crypto fear and greed is 41, up 1 from Tuesday, Octa. And disclaimer, none of this is financial advice, just a guy on the internet. And of course, don't forget to subscribe to the channel. If you want to learn something new every single day, that is my promise to you. You will get smarter, which will equip you for the future. Now, market overview, a couple of stats here, which are kind of interesting. I like this from Swissblock. You can see the little dial of where we are for the last year, the 52-week range. The Dixie is kind of like in the bottom third of the range. Not bad. The NASDAQ, very close to the top of the range, and people are absolutely stunned about why the NASDAQ is so strong. How can this be? Well, it's called the AI revolution, ladies and gentlemen. We know that. The S&P is about 150 points away from the top of the 52-week range. The 10-year is close to the top of the range, which is not good. It's smashing things. We'll talk more about that in a minute too. Bitcoin's about the top third of the range, and Ethereum is bang in the middle at 1635. So looks like Ethereum has some ways to run compared to Bitcoin so far. Let's look at the state of Bitcoin, and this is the bearish box in the bottom right corner, pink. We want to get to the purple. We will get back there soon. 32 weeks, or week 32, 4 weeks ago, we were nearly there, but now we're in bearish mode, but about to go neutral up, I'd say soon. Remember, it's Rectember, and nothing good happens in Rectember, but maybe it's quieter than normal, so things might not be that bad. Now let's talk about some Bitcoin stuff. Hey Jim, good to see you, buddy. Short-term holder realized price, STHRP. You guys know all this in this channel. You know all these acronyms I use. It just saves me typing a lot of words. So the collective cost basis of Bitcoin recently transacted within the past 155 days, which normally acts as a support level, especially in an early bull. But we broke under it. That is not good. That's a bit of a bearish sign. And the transformation suggests that short-term traders may consider selling their bags at below cost to potentially get out of the trade. Who knows? But monitoring this level is crucial for assessing the forthcoming price dynamics, and it lies around 28,000 now. That's the green line of the chart, and the white is the price. We are very close, and we're holding tight, again at that 26K level, but we are under that short-term holder realized price. And we'll see where we go from here. Now, let's talk about a little trick, a little life hack that I promised you all. It's kind of funny. And a shout out to Sanjay for sharing this with me just this morning. He also works 7 days a week. He is awesome. But Bitcoin fixes this, is the old expression. Now, this chart has two lines. You've got the green line, which is the median sales price for houses sold in the United States. And I'm sure it's pretty equivalent around the rest of the world too. In fact, some markets like Sydney, Australia are completely bonkers. And New Zealand as well, and parts of cities in Toronto, Canada, etc. London, insane. But the gold line is the median sales price for new houses sold in the United States based in Bitcoin. So the average median home price is 20 Bitcoin today. And this is going to fall in the next year, I guarantee you. And the reason is Bitcoin is more scarce, it's more portable, it's more liquid, it's more divisible, it's more fungible, and it's less taxable than physical property. And investors no longer need to hoard real estate in order to preserve wealth. That's a big trick. I always preach the three-legged stool, crypto, equities, real estate. Everybody needs a castle, especially where you can buy it with 10% down, use a lot of leverage. But Bitcoin is that alternative if you cannot get on the property ladder, as they say. And housing will become affordable again as it loses its monetary premium and is priced solely on utility and as Bitcoin goes up in value. So that's a fun one. Now let's talk about some other cool charts. This one is from Blockware Solution. And I did touch on this on Tuesday. And I talked about how only 95% of the Bitcoin supply has not moved in 30 days. Well, we're still here. 5% has not moved. Only 5% of Bitcoin's circulating supply has moved in the last month, and the price is set at the margin. Okay, the important thing here is anybody who wants to come in and trade Bitcoin, okay, if a big buyer comes in and only 5% is moving, you have very little liquidity, which means anybody coming in making a big buy will drive the price up or skyrocketing. Any type of demand catalyst we see. And people are always saying, well, there's not enough liquidity. Isn't that bad for the asset? No. If people want in, they have to buy. And price is made at the margin. If there's very scant supply, price will go up. The supply crunch could really be happening much sooner than expected because nobody is selling right now. And it's actually almost a miracle how the price is so steady with such little supply. It means there is simply no action or everything's happening OTC. Jeff, I see you again today. Thank you so much, buddy. First of all, let's go back to miner squeeze. A lot of talk about miners, a lot of fear about miners, a lot of FUD being spread. A lot of FUD being spread about Bitcoin, Tesla, miners, etc. But this is interesting. This is the hash price, which is the amount of revenue that miners earn per terahash of hash rate. And it has been declining in recent months due to the recent drop in Bitcoin price. Now, the interesting twist of this is miners who are unable to cover their operating expenses with the current hash price will be forced to sell Bitcoin. This could put more downward pressure on Bitcoin price, as more Bitcoin being sold into the market brings down the price. But remember, it's very scarce and the supply is very short right now. But if the hash price remains low as we approach the halving, the weakest miners, those with the inefficient machines and high electricity costs, will be forced to capitulate. This will reduce the sell pressure on Bitcoin and could lead to a price rally. So it's like a double-edged sword, and you can see how things have developed over time. Bitcoin price is in white. The miner revenue per terahash is in orange, which is getting very low. And then there's 365-degree change. So again, things are going to become very, very tough for miners that have old rigs, costly electricity, and poor management and heavy overhead. They're going to be squeezed, they're going to be smashed. So you're hearing a lot of stories about miners pivoting to AI, using their compute for AI instead of their core business, which is Bitcoin mining, which is kind of crazy, viciously. See you out there. So watch this space carefully. Now, this week was a big week too, because we had lots of good news. This, first of all, is the FASB rule change, which, again, nobody wants to hear about accounting, but FASB is for the Financial Accounting Standards Board, and they revised their policy allowing US-based businesses, public, private, non-profit, etc., to mark Bitcoin on their balance sheet as fair value or mark to market. And that is very, very important because it helps them reflect true numbers in their accounts and records. Now, the beneficial change is highly advantageous, enabling businesses to reflect the current market value of Bitcoin, boosting incentives for more institutions, public traded companies, even private companies, non-profits to place Bitcoin on their balance sheet and adopt a strategy similar to MicroStrategy. Now, the bad news is this doesn't become effective till 2025 because it's running at the speed of government. And we know that's not fast. Well, I actually spoke about that in the previous video. I'm getting all confused. How Mexico sat on their hands and Elon said, screw this, I'm out. Not out necessarily, but basically Mexico's going to give up on a very big opportunity. Anyway, ARK, in other news as well, ARK filed for an Ethereum ETF. First one to do it, and then it was immediately followed by like 5 others within a day or two. But the price of Ethereum didn't really budge. And that's kind of good news because we know when a Bitcoin ETF is approved, in very short order, an Ethereum one will be approved too. But breaking down the ETH price action is fascinating because here, this is a chart from Into the Block Crypto. I do look at a lot of on-chain stuff, but it shows that a total of 5.1 million ETH was acquired right just below the $1,600 mark to create the support band. This is why it's so important to look at this stuff. While a total of 6.5 million ETH was purchased above that level to establish resistance. This firm concluded that traders agreed to transact within a very narrow range, where a large concentration of ETH positions are, and this is what's called a perfect equilibrium, right between, say, 1690 and 1590 and 1650, and that gives us that demand balance of 1625. And this is completely confluent with the chart I shared on Patreon a couple of days ago at that 1620 level, because we had an ETH death cross, which 60% of the time means the price will go down, but IDSS says it's going to go up. So I'm absolutely fascinated by this to see which one wins, and I think I know. But there could be a bump along the way. Now let's look at layer 1s and layer 2s this week. What has happened? So it's a quick summary dashboard from our friends at Artemis. And you can scan all of the layer 1s, all of the layer 2s, which ones are growing, which ones are shrinking, which ones are doing more volume, etc. And I just love to scan this and summarize it for you all, because we want to be where the growth is. So first of all, in terms of TVL, Matic wins up 2%. In addition, stablecoin volume, Matic also wins up 2%. In developers, I always say follow the money, follow the developers, very important. But weekly commits on Sol wins, and weekly active developers on Sol wins. There's a lot of stuff going on with Solana. Solana was also huge this week with Visa news and everything else I covered in great depth. So it's just been a massive week of news for cryptos. Anderson, good to see you, buddy. Now, in terms of daily active users, Phantom is up a massive 43%. And in daily transactions, Phantom is up 24%. So keep an eye on Phantom, but that's a big bounce in a short window of time. Wonder what's going on. So let's look at a little bit of stock news too, find out what's going on in the stock market. You can see we're now in this no man land. This is a beautiful chart of sentiment. And this gives you the feel for whether people are bullish or bearish. We are right bang in the middle at 50. And this is what they call no man's land. Momentum indicators appear to be settling at the neutral level. So nobody knows if we're going up or down, which is normally overall a pretty bullish sign. Now, let's talk about banks again. A lot of people saying, oh, the banking crisis is over. It's all finished. No, it's not. Even the big banks that are close to the Cantillon machine, the Cantillon effect, the closer you are to the money printer, the more money you make. This is $250 billion in unrealized losses at just 4 US banks. Bank of America, $106 billion in the hole. JP Morgan, $34 billion in the hole. Citigroup, $24 billion in the hole. Wells Fargo, nearly $40 billion in the hole. This is a bill that's not paid. This is the so-called term risk that they're facing. But it's okay, because you know what? The government's bailing them out, and this is the BTFP. Sounds like buy the dip program, but no, it's the Bank Term Funding Program. And it keeps running, and it keeps pumping money out and keep bailing these banks out. And they can basically borrow their distressed US Treasuries at par. And the government just gives them money. So they're actually, even though they have huge losses, they're okay because the government's painting over that problem. In addition, I did a video about a month ago on bankruptcies on the rise. Well, we just had a huge spike this week as well, and things are getting worse, really bad, really fast. We are back at global financial crisis level for the month of August so far. And in other bad news too, and this is all the damage that's been wreaked by the high interest rates in the context of dwindling savings and the swift expansion of credit. Consumers, basically, it appears they have no intention of repaying debt, as evidenced by soaring charge-offs. Now, this is kind of crazy. Credit card delinquencies have reached levels never seen before. 7.51% of credit card payments owed to smaller banks are currently in delinquency, and they're not going to get better. The average credit card interest rate is 29%, and the issue is less severe for larger banks, as larger banks tend to have richer clientele, but it's still a problem. And this average delinquency rate for the larger banks is about 2.63%, I think. But it's important to note that smaller banks are also grappling with the aftermath of the deposit flight and exposure that they have there. Also troubled with commercial real estate, compounding their challenges further. Thanks, JP. I mean, this is just a perfect storm of crap. If you are not a money center bank, it is ugly. More banks are going to hit the wall. It'll be slowly, but we see that as well. The retailers who have got credit card systems like Macy's, they report as well huge delinquencies. People are just like throwing in the towel. Say, I just can't keep up anymore. So it's bad, and the banks are left holding the bank. Now, in addition, another point of view of this is non-mortgage interest. And again, it's US data, but I guarantee you, actually, this one could be global data. I'm not sure. It says BEA global data, TS Lombard. I need to figure that out. Either US or global. Probably US, but could be global. Either way, people are feeling the pinch all over the world at the same time. Consumer interest rate expenses, these are interest payments as a percentage of total wages, have skyrocketed to over 4.2% in recent weeks. It may not sound like a lot, but it's the highest level again since the Great Financial Crisis and is in line with previous recessionary levels. And despite higher interest rates continuing to take their grip on the American economy and consumer, the market looks ahead to the distinct possibility of higher rates to come. But will they come? I don't know. Everything is being broken right now. And I wonder, does JP look at this? But there's more. There's always more. So the odds say, per Econometrics, no more hikes. No more hikes in September. No more hikes in November. No more hikes in December. And a cut sometime in 2024, or maybe even before that. But again, I wonder, is JP seeing all of this, or is this a plan to destroy all the banks except for the money center banks and then deploy a big CBDC? You know, when you see the action happening, you've got to think there's something weird going on. And I've been talking about oil a lot, and the reason I talk about oil is it can be fun to trade at very low prices or very high prices, but not in between, because you never know which way it's going to go. But it was pretty clear that oil was going to hit $90 to $100 by year end. And by the way, oil futures just broke 90. It's happening way faster than expected. Soul Strider, good to see you. So the reason we care about oil drives inflation. That's it. Everything you buy, everything you do, everything that's delivered, every service, every product has a component of oil in it. And that's why when oil goes up, inflation goes up. But we'll see if it'll be counteracted by things like owner's equivalent rent, etc., which are now beginning to reflect reality. So we'll see. Anyway, in addition, there is a very tight crude oil supply, and OPEC and OPEC Plus are in control, threatening more supply cuts, and it's already a huge problem for inflation. Again, as I keep saying, JP doesn't control inflation. Oil does, OPEC does, OPEC Plus does. Now, I did cover in a previous video, in case you missed it a few minutes ago, the $10 trillion math for Tesla and how that equates to Bitcoin. But basically, per Elon Musk, he does believe the market cap of Tesla will be 10 trillion by 2030. I'm pushing out a couple of years, 2032. My bear case was 2681. According to his new model, it's about $3,350 a share, which is huge. But what? The question is, if Tesla does a 13.5x from today's price, what would happen if Bitcoin does a 13.5x from today's price? And that takes it to about 351,000, which is also very close to my bear case for Bitcoin too. So either way, as I say, the future is very bright for us over the next 7 to 8 years out to 2030 and beyond. We're going to see a lot of disruption and a lot of very exciting change. So get some hard assets. And second last piece of news for everybody down in New Zealand. It's kind of sad. This is data collected by Jim Gleason, posted on The Economist. He's a global researcher in London, I think, and he looked at all of the amount of rent paid by people all over the world, and he found some interesting statistics. So between the year 2000 and 2020, the number of homes for every 100 people rose in Britain from 43 to 44, and in America went from 41 to 42. And in New Zealand, population growth outpaced construction. One of the few countries that's actually growing. And the number of homes per 100 residents fell to 38. And therefore, if you look at this number, it's the share of renters spending more than 40% of their disposable income on rent. The poor Kiwis, 1/4 of them spend more than 40% of their income just on a roof over their heads. And number 2 is Britain at about 23% of people spend more than 40% on rent. That is not sustainable. That's not good. And that makes living very, very expensive. And finally, related to dollar index, Dixie, etc., BRICS, some believe BRICS, their whole plan between Xi and Putin, etc., is a perfect checkmate for the dollar. Many people also say, do not estimate the events of the past 2 weeks because they are monumental and will be regarded with the same revere as the birth of NATO. Some believe this week has changed the world. We're seeing a huge bifurcation between the West and the BRICS. And the end result could be ugly. It'll be gradual, though, over time. But as they start trading more with each other and less dependency on the Western world and the US dollar, things will be shaken up a little bit. Therefore, we Bitcoin, everybody. All roads, no matter which way you skin it, leads to Bitcoin. And thank you to everybody on Patreon. A couple of seats there if anybody wants to join the biggest community in the world. And have a great weekend. I'll be back tomorrow with the Q&A, which is our most popular show of the week, where people learn the most. And I answer all the top questions of the week from Patreon. Thanks, everybody. Have a great day. Thank you to the mods in the chat and everybody for being here. Appreciate you all.